It sounds like one of the big takeaways from the summit, at least on your part, was A, the number of names that presented, and B, the emphasis on digital, which we knew was important, but we never realized it was going to be so critical.
Yeah, no, it was a great summit this year. And what we saw and we heard from companies, particularly those companies that have huge on-premise businesses, the fast casual chains like a Chipotle, but also the casual dining chains like a Texas Roadhouse, they've had a transformational event from this in terms of their digital adoption. And given the fact that a lot of their competition are going to have a hard time coming out of this whole virus issue, they might have a major step change in terms of their engagement with their consumers, but also their survivability and their sales per restaurant. So it's not going to be just a positive from a competitive standpoint, but you can think down the road and think about marketing and also even costs being better for these guys.
Right. So digital and then drive-through. I noticed last week McDonald's managed to shave some 25 seconds off of service time through drive-through. They're trying to limit their menu. But how critical is drive-through? And is it too late to get things like digital or drive-through implemented if you're not already there?
Yeah, you pointed out drive-through is definitely a killer format for McDonald's. It's actually been one for Starbucks, and almost 60% of their stores in the U.S. Have our drive-through format. It's a bit of a retardant to their digital adoption, though, because when you're sitting in your car, you just want to order there in the drive-through lane, and you don't see the upside on the digital for adoption in terms of convenience to you. Going forward, Starbucks is going to start to reopen their stores, and they're going to need that digital connectivity to make it more convenient for you to pick it up at the storefront. We're going to see that one of the problems for McDonald's and a Starbucks is that breakfast day part. That has been slow to come back here. So that's something we're very much watching. But drive-through is one of those formats that's been helping today in terms of their market share, but it's not really going to have an accelerating benefit in the future like digital adoption.
Huh. You mentioned breakfast. I mean, we always talk about breakfast as a byproduct of employment, right? You got to have a job to go to, and that's why you would stop somewhere for breakfast on the way. How concerning is that? Yeah. Do you think it's going to reverse? I mean, I'm thinking of a company like Wendy's, which made a big splash into breakfast just as this COVID began to take place.
Yeah, Wendy's has done pretty well with breakfast for considering the fact that day part's down 20 points more than the other day parts. And it doesn't have that check increase that those meal-oriented guys like a Popeyes would have, where you have that big family order going back home. Breakfast, you lose that urban commuter and that urban energy, and it's gone for a while, and it's coming back slowly. There's going to be breakfast wars like we thought, but it's going to be starting from a lower point going forwards. McDonald's is going to try to get that back. Starbucks' guidance implies that they intend on getting a lot of it back with the help of a broadening digital platform. But it's much harder at breakfast for these guys, Dunkin' included, and a slower slog than some of these dinner-oriented players that are doing really well now.
So, David, I wonder, the companies, the brands that are company-owned versus the brands that are heavily franchised right now, who's in a better position? And I ask that because when we're talking about things like the costs of digital adoption, obviously you've seen some prices for certain types of food rise given the supply chain issues right now, all the uncertainty around the consumer, whether it's breakfast or just reopenings in general. What are the types of companies that are better positioned to weather those higher costs and move forward in a more meaningful way?
Well, the company operated guys are ones, whether it's Texas Roadhouse or a Chipotle, you're wondering are we dreaming high enough on our earnings in 2022 and 2023? Because they're going to be getting a lot of share. They're going to be having much higher percentages of their business that is digital. So that means cheaper interaction from a marketing standpoint, but it also means lower labor costs at the checkout. So it's actually looking really good. Think about the fact that labor costs inflation was 3.5% to 5% going into COVID. Now coming out, it's going to be low single digits at most. And even the meatpacking industry is back up and running again. So we're looking at lease costs with renegotiated leases, digital mix, labor inflation is going to be lower. The earnings for these domestic company operated guys may be a lot higher. So that's something we're going to be thinking about a lot about coming out of this conference.